Welcome back to Rockstock Channel. It is Wednesday, November 16th, and a pretty much monumental day because it's a few days before your 40th birthday, Simon?
It is actually, yeah.
It's a few days before.
Thanks for telling everyone.
And but more importantly than that, or as importantly than that, is on the tape here from Reuters is a private equity fund takes 20% stake in EV data provider Benchmark Minerals. We are here in Los Angeles at the flagship Benchmark Minerals Week conference in Los Angeles. I haven't been here since 2019. But Simon, we've been trying to organize an interview, a follow-up to our interview last year, and you kept like putting it off because you wanted to wait, for this news, which is now broken. You told me yesterday that I guess it'll be official now. Money hit your bank account. The headline here says private equity fund Spectrum Equity has bought a 20% stake in UK-based Benchmark Minerals Intelligence in a deal that values the data and information provider for the electric vehicle supply chain at just under $500 million. It says terms were not disclosed, but it said 20% into $500 million. Is this fresh equity into the company for growth, or is this you own 100% of Benchmark? So anything you could disclose about this? But first of all, congratulations. Bow down.
Appreciate it. Thank you.
Appreciate you taking the time also to have us interview you at this time. But yeah, just tell us about this and congratulations.
I'm not good at maths, so I can't do the sums, but the numbers I can't specifically comment on. Obviously, you can read what's in there, but in principle, we've been looking for 4 years for a true investor that knows what we're about at Benchmark, knows what the community is about, and knows where the industry is heading, right? The opportunity in this battery thematic and this energy transition. So on the deal, it's a simple deal. It's really fair, I think, and it's 20% of the company, which obviously I own the business Benchmark. 20% of that now owned by Spectrum, and it's just an equity position. They now own 20% of the business. They don't have any control over the editorial rights, but actually for us, it's a perfect partner to scale sales and technology. So in terms of investment in the business, actually Benchmark's always been a very profitable business, right? The hardest thing for me is the scaling aspect and spending money properly on the right things. And I think now, after 9 years of Benchmark, that kind of challenge changes. It's a different challenge than what it was 3-4 years ago.
So this is fresh capital going into the business that will help you grow the business?
No, so that's actually, so the cap, at the moment, there's no capital going into the business to grow it. The business actually is profitable to grow itself as is. Now, the question is, do we want to expand the plan even greater and then put money back in? Do we want to look at M&A opportunities that can grow the business that way? There's many options on the table, and that's the beauty about having, a really world-class private equity fund that gets what we're about, is that all those options now are on the table.
Okay, that's great. But they just wanted a foothold in the business, and they basically enabled you to monetize all your hard work over all of this year in a piece. And now you have a partner. And how many employees do you have now?
Now just under 170.
170. Okay. Before we start today's video, we'd like to thank Lithium Royalty Corp, listed on the Toronto Stock Exchange, ticker symbol LIRC. We'll share more later in the video. When I saw you last year in London, you had indicated that you were going to invest a lot in technology. And so what are you got Project Skyfall. If you could just, I remember meeting you in 2015.
Yeah.
I had one lithium client at the time. It was Western Lithium, Jay Shemalauskas.
Yeah.
And he was telling me, he introduced us and said he had signed up for the Benchmark, your first world tour. And he had signed up in 6 cities. And I remember Andy Miller, the first time I met him at the New York UBS event, you had just put out your pricing. And I was very, not aggressive, but just persistent, raising my hand, asking him questions. And he was like nervously answering in a public forum. But he introduced today, and you had Stanley Whittingham today. And Arnold Schwarzenegger yesterday. You have the world
They're my
tours.
friends. They're just my friends. It's okay.
You have subscriptions. I have here like what's next for the Battery Bull, which is the quarterly magazine, and you have, I think in here, lithium industry needs $116 billion in your high case. And then there are a few others here, but so you have your conferences, you have your data subscriptions, you have these quarterlies. So what is, I guess, talk a little bit just about the evolution of Benchmark, from those first years, where you are now and where with this private equity investment and your future plans are.
Yeah, we've known each other for so long, right? It's 9 years going on 10 years next year. The La Decima, Benchmark's La Decima, 10 years. We're going to do some fun parties next year. But no, the first thing actually, what I didn't say in the last bit is with Spectrum Equity, they're not investors in the battery supply chain. They're not investors in critical minerals. That's what we do at Benchmark. They're actually specialists in data subscription companies. They really understand how to deliver data in innovative ways to lots of different clients. They understand how to evolve sales and how we sell our products to the ever-growing community of the supply chain, the finance industry, and the political worlds that we sell to. So for me, that's the exciting future of Benchmark. It's not touching the product. We're product guys. We're data guys. We're lithium pricing guys. We're battery guys. It's not that. That's covered. It's actually delivering it in a much more efficient and effective way than we have done before. And rewind back to 2015, where we came from. It was a magazine. I started in my one-bedroom flat in Penge in southeast London, and I did a magazine. You might remember this one, which had Elon Musk on the front cover, and it said the battery mega factories are coming. We call them gigafactories now, right? But do you remember that one?
Yeah, I have it in my house.
Yeah, I might sign it for you. Actually, that'd be quite nice. It'd be worth something now. But yeah, the magazine, the battery mega factories are coming. I wrote every word in that magazine. I sold 10 adverts for that magazine, and that 10 adverts got us about, was it £30,000 or something and that was what I used to start Benchmark. There was no investment, there was no money, there was just a magazine, an idea, knowledge, graft, and we grew the business. And Liz Eckert came on board, then Andy Miller, then Ben Ash, then Casper Rules, and all of a sudden we had a really awesome core team that were just traveling the world on these Benchmark world tours, grafting to launch. We start with a magazine. Now it's lithium prices. Now it's graphite prices. Now it's forecast databases. Then it's events. Then it's consultancy as well, advisory on where to place all these billions of dollars in capital. So that was the evolution from 2015 through to now, really.
Mm-hmm. And I've been enjoyed very much watching your success. We've been on the periphery participant. We've spoken a couple of times. We've had you on the podcast. The Price is Right. Using our pop culture references. So let's talk a bit about that, because I'm here at this conference. Like, Rodney was here last year. I was not. The last time I was here with Rodney was 2019, before the pandemic. And I was just reminiscing about, the people that we saw there. It was like Ken Rinsden, at Pilbara, and Anthony C., at Galaxy. These were like the spokespeople of the industry. They're not here. Anthony is, but, not in any, significant capacity. But who are here? You don't even have Albemarle here, but you have a lot of government officials. You have Exxon sponsoring for the first time, and they're entering, the lithium business effectively this week. You have Arkansas government officials, I think, here. I think Saudi Arabia, lots of auto OEMs. And you also had, I missed the June conference in Washington, a very significant thing that you've done has, we have in America this like whole of government approach now addressing the battery supply chain. And that's a huge change from when you were testifying in front of Congress and gave your famous, bystander speech. I'll ask our editor to, insert this into the video.
This is lithium used in the battery industry. Cobalt set to go up 6 times. Nickel set to go up 5 times. And graphite anode set to go up 9 times.
It was really a wake-up call. you turned us on to who is, Lisa Murkowski, the senator from Alaska, and then the Democrats took over in Congress, and Joe Manchin, and then he was so instrumental in the Inflation Reduction Act being passed, and then now the speculation he might run for president. Like from a Washington D.C., from a geopolitics, a made in China 2025 versus the ex-China world. Give us your current view on where we've come and where we're going.
Yeah, I couldn't have put all of that better than myself. Right? Really, it's the thing. What you just underlined there, Howard, is on one hand, as you heard in the previous question, Benchmark is a pricing company, a data company for all key battery raw materials and the supply chain. So we're very much embedded in the physical industry, physical contracts, decisions to build billions of dollars of gigafactories around the world. Benchmark's really been very instrumental in that and helped really dictate the flow of where that kind of money is going, right? And those investment decisions. But for me, the what makes Benchmark special is that influence factor, is the influence in government that you've explained, and that all started with just me and the team going to Washington DC in 2015, speaking to the USGS, building relationships over the years, and then all of a sudden, thanks to Lisa Murkowski, thanks to Joe Manchin, this becomes geopolitical mainstream with the help of COVID and supply chain disruptions, right? So my view on where we're heading with this is we're heading with a turbocharged America. I think you've got another at least 12 months of the Inflation Reduction Act, depending on what happens at the election. That is the providing mining, mineral companies, supply chain companies can fill out the government forms correctly. And I don't mean that in a facetious way. I mean that in a real way. Then money is there in the US to build assets here in America. We could not have seen that probably 5 years ago. It's changed even 3 years ago. Right? It's completely shifted the economic access of the whole industry. And regardless of what happens in the next election, the impact of an Inflation Reduction Act that's lasted 2.5 years will carry the industry through to building a battery economy here in the States. But the key thing for me is investment in mining, Canada, US, and agreements with friendly countries. There's nickel news out with the US government and a nickel agreement in Indonesia as an interesting example of how to slice and dice and get around certain political blockers. But what you'll see is the states and the US government really focusing and going all in on mining of critical minerals in the States and with friendly countries. And I think that will be the mega trend of the next at least 5 years.
Okay, well, Jigar Shah and the Loan Programs Office, we just did an interview with John Miller, which is going to come out just before this one. And he has built a bank from scratch, and he's going to be deploying a lot over the next year because we don't know if he'll be in power or Biden will be in power after that. So we're looking, there's Ioneer, there's Lithium Americas, there's Piedmont, a few others on the lithium side of that equation. Why don't you go ahead, Rodney? And there's been a lot of M&A, in the lithium space in particular. Rodney, why don't you fire away with some of your questions?
Sure. So, Simon, congratulations again. We've been chatting for a while on that. That's really great news. So, in line with the conversation you've just had, I'll jump to one of the questions I've got is how long, if ever, will it take the US to create a self-sufficient battery supply chain?
Good question. I would like to say 10 years, but that's being optimistic. Probably 15 years, I think.
So you think it can be done from the raw materials through the cathode, through the cells, a lot?
Yeah, I'm echoing what Stan Whittingham, Nobel Prize winner Stan Whittingham, said on stage today, just now. Providing the US can, in terms of critical minerals, the US can speak in terms of, not the US, but in terms of North America. So the US and Canada and other neighboring or at least friendly countries that they deem friendly, Australia, Argentina, Indonesia now. Providing the US can get around its own policy quagmire to unlock these obvious opportunities, and then I think that is for me the key thing here, and that will take. I think they're okay. I think the US is acting quickly on the policy. I think then it gives finance comfort. The problem with finance is if the lithium price is going down and other raw materials are going down, the sentiment in the industry slumps. Bad headlines go out about EVs slowing, and so the finance slows, and then we push the problem back into the future. But providing the finance can stay stable and increasing, and the government can sort out its policy, which is happening, then I think this trend of critical mineral build out will continue, push through to this decade, and then the scaling of a mine, of a plant, once it's up and running, is at least 2, 3, maybe 4 years, right after that. So in that 15, I'd like to say 10 years, but I'm building in 5 years of redundant of scaling issues that we're all familiar with minerals and chemicals into that as well. And I think so. You go back into the 2030s. You've got scale. You've got a supply chain that is self-sufficient, and you've got battery recycling, which is a key component in all of this to underpin that sustainability.
There are two things I'll just comment, and Rodney, you can continue. But Stanley Whittingham made a funny quip, from a perspective of North America and critical minerals. It's the United States, and it's Canada, and it's Australia. So he was categorizing Australia as North America because they very much, not just for lithium, but in particular lithium, but other raw materials, they very much want to diversify away from China. And then Arnold Schwarzenegger, I was a little bit late to attend that, but almost the first thing I heard was him very actively promoting the potential for lithium, in the United States. But then he was banging on, the permitting, and he was saying stop talking about climate change, just talk about anti-pollution. Right. A lot of what he was talking about was branding. You managed to spend a few more hours with him, I think, after he presented. Do you have? He's a fantastic spokesperson. He's from California. He is a Republican, but a full-throated endorsement. I put out these funny videos where he has this persona called Howard Kleiner.
Hey, Howard Kleiner.
Well, Howard
Good to see you.
Yeah. Promoting electric vehicles from a few years ago. But do you have any sense that he'll get more involved here in promoting this pro mining, permitting, and the necessity of that?
Yeah, we spending time with Arnold Schwarzenegger. It sounds bizarre, doesn't it? It sounds ridiculous from my perspective. It's how ridiculous can benchmark become and this industry become when Arnold Schwarzenegger is on. The absolutely credible Arnold Schwarzenegger in our industry and in climate changes is on stage talking about critical minerals, talking about lithium, talking about permitting. He absolutely knows what's going on, switched on and plugged into not just what's happening, but the actual impact of the moment in time that we're in. I think, Schwarzenegger has done it all and seen it all and lived probably 3 or 4 different lives and has got to the top of his game at every single one of them. The interesting thing about what Schwarzenegger did as the governor of California was he began this political narrative with the work he did in California for over a 10-year period or an 8-year period. So no wonder this critical minerals theme, this batteries theme, this mega trend ties, it sets alarm bells off in his head. And I think the key thing that speaking to Arnold about was we want to get him more involved. We want him to speak on these issues that if we're going to have an energy transition, it is mining. And we want him to carry, what I believe is one of the most influential voices in the world through to politics, to actually let our message that, that Rodney Howard that we've been speaking about for years, to let our message resonate. And that's really the goal. And he's well up for it.
I think the more you can do with him, he's an unbelievable salesperson. He's an unbelievable, just human being. He's one of my favorite heroes. That's just a great, amazing life story. And but to hear him just full-throated saying, understanding that in America you could have, like you had the shale revolution in oil. America went from import dependence to virtual oil independence in 10 years, just through significant investment in fracking, horizontal drilling, et cetera. And we have the resources here in America, but you need the will, you need the permitting, but it won't all happen here. It will happen in partnership very significantly with Canada and Australia and other friendly countries. We'll see what happens with Argentina. But money is being lent to Mozambique, for Syra, and I know Piedmont and Atlantic are trying to do something in Ghana. All right, Rodney, you have more questions here.
Simon, you guys have written quite a bit about it, this new introduction of export licenses for certain grades of graphite, to be exported out of China. How genuine, it's not a ban, it's export license. How genuine a threat do you think that is? And what's the kind of read through?
Yeah. 3 weeks ago, I think it was, that China decided to ensure that those exporting certain grades of graphite, including graphite used in lithium-ion batteries, now had to have an export license. I think, from a China policy perspective, it's actually normal course. There's so many industrial minerals and niche minerals that have these kind of controls on it that if you're within China looking at this, it's probably not big news, or they probably didn't think it would be big news. Whereas when you've got 95% of anode material, maybe more, coming from China, you've got 70% of flake graphite coming from China, 80% of synthetic graphite coming from China, you can see how the rest of the world absolutely, let me think of the sensible language here, it terrified them. That's probably more sensible. It instantly terrified them. And do you know what it reminded me? And it's not like for like, but the sentiment reminded me of the rare earths situation back in 2011, when government policy, China decided to block rare earth exports to Japan, China being the only major producer of rare earth elements. But it was a political reasoning why they blocked it. So that was actually even more tit for tat, and that caused chaos in rare earths. But it reminded people of that moment. And then all of a sudden, the OEMs, the battery makers that haven't been looking at graphite because there hasn't been a supply disruption, there hasn't been price spikes, they're now going, we need to look at graphite. And it's amazing, nothing happens until there's a problem, and then everything happens. So that's my initial take. And you know what? Graphite hasn't had its moment in the sun in the 10 years that this global battery arms race has been going on. But this is its moment now.
You started in graphite, right? Before you started Benchmark, and you were at Fast Markets called Industrial Minerals. So you have, everything started with graphite for you.
Yeah, good point. It did. But Benchmark's first product after the magazine was a graphite price assessment was graphite, right? That was what I did. That was my kind of specialist subject. So it's good. Whilst good is a term, but for me, seeing graphite being talked about in detail outside of the industry now is a really interesting moment.
We've discussed the US and looking at a complete supply chain. If we look across to Australia, we've seen numerous M&A deals go down, literally, with Albemarle being scuppered in Liontown, but Minres and Hancock stepping in and really claiming their local turf. But I've seen various things mooted, but how far down the value chain do you think the Oz players can go? Will it stop at an intermediate product? Or will there be more converters built? I know there's plans of expansion, but the actual number and cost of capex per ton has been higher than expected. So can Oz go beyond with intermediate products and then converters, and then go down cathode and battery facilities? Do you think that's a reality for them? Will they need massive subsidies? Do you think that's realistic for them, or will it stop at the chemical level?
Yeah, I've thought about this quite a bit. Australia can do anything it wants, right? Like the skills, the ingenuity there, as a mining and minerals and chemicals, or mining and minerals at least focused country, it can do anything it wants. But I've always thought that if you do one or two things and do them really well and scale them, if you've got the resources, if you've got the know-how, if you've got the therefore experience, and you've got the ambition, then become the world's, which it has done in lithium, of course, but become the world's leading supplier of raw materials is step one, of course, the mining side, but specialty chemicals. There's no reason why Australia can't value add there into chemicals, and then maybe cathodes, if it makes sense, and supply the energy revolution around the world, not just China, of course. I think going any further downstream, really in Australia, shipping batteries doesn't make any sense unless there's reasonable production of EVs and energy storage in Australia. Energy storage is a maybe. You're not going to be making loads of batteries in Australia and shipping them around the world. It's just logistically not possible, or not economically sensible, if you like. But I think Australia, anywhere from the mining through to the cathode or anode, is a great opportunity for the country. But not everyone's, if you're a major spodumene miner in Australia, it might be too difficult to build a refinery, a hydroxide facility, let's say, as we've seen the delays on the two hydroxide facilities there. It might be, maybe is it sensible? Do you build a hydroxide facility in the USA as a joint venture? Do you actually stick to mining, refining, and upstream chemicals in Australia, and then do JV downstream plants in other countries and tie up the supply chains there? I think actually that latter part is probably the direction Australia should go and probably will go.
Okay, great. And just on the M&A, the prices have risen and jumped up in the last couple of days. But earlier in the week, when I drafted the questions, if you gave a fair multiple to the two other businesses, Albemarle's lithium business on its own was trading at like under a $10 billion valuation. So if you think about what their production profile is and earnings, is there a chance the hunter could become the hunted? Those are the sort of valuations I would think that would start to get some of the major mining houses interested. If you think about it, where it's come from, that's was nearly a third of the high. At what point, even though we're seeing falling spot prices in China, does M&A on a major scale become appealing?
Yeah, I agree. I like that phrase, the hunter become the hunted, I think is a really apt phrase. That's the ebbs and flows of an industry that's scaling, of a let's say a stock market that's probably disconnected a little bit, or its own world, because I'm not from the finance world, so I don't look at stock prices, and we can't invest at benchmarks. So that's what you guys do. It's never what we do. But from a perspective that I think now from a buyer's perspective, let's say big mining companies, big petrochemical companies coming in, ExxonMobil announcing their intentions on lithium with extremely deep pockets. I think looking at it from their perspective and the fact that the government will is there, I do think now this next low price environment that we're in, and that will probably this for lithium, for nickel, especially, I think the low price environment is going to last 18 months or so. It's just a kind of the next phase of the EV scaling begins, if you like. I think everything's up for grabs. I think now that the big companies are convinced that this battery story is scaling, that lithium is now roughly 1 million tons LCE a year and growing quickly, regardless of the price falling, that battery prices are now come down to under $100 a kilowatt hour because the lithium price is lower. I think all these things just from a major corporate perspective is game on, pedal to the metal. And I think that whilst the headlines might be bad for EVs at the moment and raw material prices, I think the big guys are sensing 18 months. You've got an 18-month window to get something done here.
You've added, you tweeted, and I mentioned your tweet, you said 9 months, now you're saying 18 months.
I can't remember what the tweet was, and I might have been jet lagged, and it might be not. Might be the way I view it is if you look at just from even if you don't know anything about lithium and you look at the lithium price, ebbs and flows over, which the lithium price for me is the bellwether of this whole story. I look at the ebbs and flows of the price. The two key things that stand out are the prices have become the highs have become higher. The lows, I think it's an artificial low at the moment because, from a lithium perspective, you need the price to be higher to bring on new supply. It's just basic economics. But I think that the gaps between price spikes and price lows are becoming shorter. So previously it was 3 years, maybe 3.5 years gap. Then the price surged for 2.5 years. Now the price is falling. I think the EV sentiment will last 9 months. I think the lithium price flow will maybe last 12 to 18 months. But after that, 2026 it's phase, or end of 2025, it's phase 2 of this EV scaling, and that's when it gets serious.
To your point, Rodney, I think Exxon is sponsoring this event. Exxon made this announcement. There was not a lot of detail in that announcement. And then there was a Reuters article which said they hadn't even yet picked their DLE provider, and they haven't made a final investment decision. But if you did the math, I think Cowen came up with 1 million cars, in 2030. That kind of translates into probably 40 to 50,000 tons as an aspiration for what they're going to do. And if you look at Standard Lithium's PFS, that's probably like a $2 billion investment. So it looks like they're serious, but still not so much. But if they were really serious, my takeaway is if they were really serious, rather than a mining company buying Albemarle, Exxon should buy Albemarle, right? If they're buying Pioneer to get more, oil reserves, figuring out the Smackover, they need chemists. So I always reference Garrett Fueling, who basically, told us that like fossil fuels, the oil industry, that's organic chemistry. Lithium is inorganic chemistry, and inorganic chemistry is not for sissies, right? So big oil has a lot of chemists. Yeah, you could build a petrochemical refinery, but the skills that are within Albemarle, I think, would be highly complementary to the skills that, Exxon, would need. So that would be my bet if they were really serious. I think it's more likely, or it would be smarter for a big, oil chemical company to be buying an Albemarle than it would be a big mining company. But, to be seen at the current valuations of Albemarle, they're no longer trading at these double-digit multiples. It would be highly accretive. Whereas in previous years, the multiple mismatch would have made it, too dilutive. But my 2 cents on
just to go
your
back,
question. Right.
Just to go back, Simon, on the pricing things. Funny you should say that, because one of the questions I have is we don't think, and Albemarle agrees, that the price is too low for reinvestment economics at these levels. So my question is, we agree with that, but how seriously do you take the risk, or is there a risk that, African material coming online, etc., can keep, prices, deflated for an extended period of time? Or is, the reinvestment economics, our theory of it being too low, legit? And we'll see, we're going to need to see, high prices cure high prices, low prices cure low prices. We're setting ourselves up again for another rally at some point in the future.
Yeah, well, you're right. We're setting ourselves up for being in the same position we have in the last sort of 3-4 years, which is playing catch up on supply. And the prices are far too low. I think the price from an end user perspective that I've always felt over the last 3 years, being in this industry, is with battery makers and OEMs, when the lithium prices are sky high, they were happy with, sensibly, we've got to keep it between $30 and $40 long-term average, and we can scale our ambitions and do our thing. Of course, the price was triple that at the time, and double to triple that at the time, and now it's way below that. But I think overall, the price mechanisms, I think, need to change as well and evolve. Of course, benchmarks are a PRA, setting a lithium industry's reference price, and it depends what price you want to use. Right? Do you want to use the domestic China price? Do you actually want to use the global weighted average the benchmark produces, which actually is a more sensible kind of weighted price for lithium that's traded around the world? I think, contracts and companies and certainly the lithium supply side still need to work out what they want to do, because it's all still quite new for them using this market pricing. It's great for benchmark, but it's new for them. So I think that once a proper mechanism sorted, once physical platforms to trade this material sorted to help alleviate issues, then you have a more mature lithium industry. Until that point, I still think you've got another 3 years of chaos, and we're not done yet.
Jumping in here from the editing room to tell you about Lithium Royalty Corp. Lithium Royalty Corp is at the center of a global energy transition and manages a globally diversified portfolio of lithium-focused royalties in electrification and decarbonization. With 32 royalties on 29 higher-grade, lower-cost projects from exploration to production, LIRC covers all the bases with well-managed risk, ESG considerations, and a scalable royalty structure. Lithium Royalty Corp is traded on the Toronto Stock Exchange, ticker symbol LIRC. To find out more, visit lithiumroyaltycorp.com. Simon, does Benchmark see any demand destruction in EVs, ESS, or any other sectors?
Demand destruction in a sense that not enough batteries being available to hit demand, or the way I view kind of, I guess, phrase demand destruction or risks to demand. This is where the EV industry is at the moment. Actually, is that you had the last 2 years of downstream EV makers getting excited by, especially here in the US, getting excited by politics, the Inflation Reduction Act, and announcing really aggressive production numbers, future production numbers for pure EVs. And the reality is that the numbers are so bullish that the industry would never have time to play catch up in a 5-year period to make enough batteries, or you might be able to make the batteries, but you won't have the critical mineral supply to go into them. And for me, whilst it looks like there's probably a bit of demand destruction going on because forecast numbers by the end of the decade for EVs are being revised downwards, for me, it was always demand that was never going to be fulfilled in the first place. Mm-hmm. I mean, you take our lithium forecast numbers that we looked at. I looked at this about 3 months ago when I was trying to do a presentation. I'm like, our demand number for lithium was, I think actually Rodney tweeted about it, or you guys tweeted about it. It made me think about, our forecasts becoming irrelevant because lithium was like 5.3 million tons or something from a benchmark forecast from a demand perspective by 2030. The industry at a realistic level was only going to get to something like, and if I'm remembering the numbers correctly, 2.3 million tons. It was like a delta of half, 50%. Yeah, I was going to say 100% then. So I told you I wasn't good at maths. A delta of 50%, and that means there's a disconnect with the whole thing. Something's gone wrong, and I think now the bad EV headlines you're seeing, the bad lithium headlines you're seeing, isn't because of demand growth in the industry that's still going through the roof. It's just because everyone got a little excited after COVID, and now they're just walking back a bit to what we think is a sensible, more rational viewpoint.
Okay, I think Alamo still has north of 3 million tons or 3.4 million tons. And they just keep reiterating that. But they have indicated in their most recent presentation, they looked at inventories at a cathode level, at a converter level, and at a trading level. They didn't say anything from a battery level. But so just going back to, I asked this of John Miller as well. I mean, you're not American, but you definitely follow American politics closely. Build Back Better Biden, he really, this deal that he cut with Manchin, 11th hour, like nobody expected it, really put a fire under the butt of, the U.S. kind of catching up above and beyond any expectation you might have had in any of the times of the last kind of couple of years. But we're going to have an election in a year's time. Polling shows that like Trump would beat, Biden at the moment. whether or not that happens, whether or not Biden or the Democrats are in power, if the Republicans are in power, what do you think happens in America? Do you think that we've passed the tipping point here, or from the EV take up on the S curve, or is is there some risk that it could be slowed down significantly just based on policy, government policy?
No, I don't think so. I think that we're past, or to use an American phrase, I guess, we've crossed that Rubicon. And I think it doesn't matter who's in power in the US next October, I think. No, next November, actually. 5th of November.
No, that's the election, but he'll be in power, he or she will be in power in January 2025.
January, yeah. Whoever, I think it doesn't matter anymore. I think, what it affects is how much money is giving away in the Inflation Reduction Act. Of course, Republican, I was speaking to ex-Speaker of the House about this, what's that? Paul Ryan about this. And it gave some really interesting perspective. And he was just saying that, the money that's been handed, and this is basic knowledge for me, so forgive me if you do understand politics better than me, but the inflation reduction money that's been handed out now and will be, obviously, until if an administration changes, can't be taken back, right? That money's there, it's being invested, it's building a battery supply chain, and a lot of it's already gone out into the market at the moment. Enough to actually create momentum for new money then, let's call it non-Inflation Reduction Act money, to come in behind it. So that shift, the shift in story and narrative that we were waiting on for so many years in the US has already happened now, thanks to Joe Manchin and thanks to the Inflation Reduction Act. So I don't worry about whoever's in power. The damage, the good damage, if you like, has been done.
You think Joe Manchin's going to run for president?
I don't know. I think it's looking likely he will run for president. I think it's quite exciting, but I don't know. He hasn't told me that, and I spoke to him on stage at DC and asked him the question, and he didn't say no, did he? Were you there in DC?
I wasn't, but he's been very coy about it, but you're closer to him than I am, but you never know. But he and Murkowski and that the Energy and Resources Committee has been like the most bipartisan committee, just like for what America needs in this non kind of tribal polarization.
It's great.
He and that committee is reflective of what like U.S. policy should be, and the fact that he did cut a deal to get the inflation. He was the swing vote. He used his power as in a very divided Senate, as a moderate Democrat to get stuff done. And this is this is industrial policy in the United States for sure. It's imperfect, but he single-handedly made it happen. So if he were president, I think not only could we have this bringing together of the middle, but just a further advancements of sensible policies, because he understands permitting, but he understands EV, and he made sure like the policies, the Build Back Better Biden policy, he curtailed significantly. They would have been like subsidizing $100,000 SUVs for people making $1 million a year, right? Like he said, no, we've got to make this for affordable for people who actually can't otherwise afford it. But he also insisted on the mineral and battery content to make it ex-China, right? Because he's very in tune with the geopolitics of it. Yeah, I think he's great. And I saw the first thing he did was put his arm around kind of like Mitt Romney, a Republican. And I saw Jay Calacanis from the All In Pod, basically said that he put his arm around saying, okay, let's address the budget.
Yeah.
But this idea of a Democrat Republican bringing moderates coming together, I think could be it would be an amazing thing. But anyway, that's just my view as a middle of the road. I'm not a Democrat, not a Republican, but just want sensible kind of middle of the road policy. For years, we've had such problem, right? I think there's a lot of potential in Manchin, but will the political system like enable it to happen, even if it's sensible? It's very difficult.
Yeah, it's interesting. I'm not sure how. I don't know the mechanics of politics that actually how will Joe Manchin actually become president, because he would run as an independent, or would he go against the Democrat incumbent?
It's a question, but the answer from John Miller seemed to be that he would do it as an independent under possibly this no labels party. But to be seen. This is going to be a topic I think we're going to be talking a lot about in the weeks and months to come.
And just a point actually on Joe Manchin and Lisa Murkowski, that they have been as you said rightly, Howard, they've been the most instrumental senators in this critical minerals and battery movement over the past 8 years, which has been as long as this thematic, if you like, has been going on. And they've been a model of how politics should work. Right? I think Joe Manchin gets a lot of criticism. Well, every politician gets a lot of criticism, I think, because coming from a coal state. But for me, Joe Manchin is a mining guy, right? He gets that everything starts in the ground. He gets he's a future-facing guy, so he understands what's coming in terms of technologies. But he's trying to get the best deal for his state, right? Which is his job. So I think if the more Joe Manchin is involved in the highest level of US politics, the US will be better for it.
Mm-hmm. And get him to enlist Arnold in some capacity, either as the VP or as Department of Interior or some significant role. But anyway, to be continued. I guess the final question is: there's this bifurcation, like the conversion capacity, the capital intensity of conversion is so cheap, and the skills are in China. So like Albemarle, Livent, they're still building lots and lots and lots in China. And the price of these things have gone up. The costs, capital costs, have gone up so much ex-China. Do you think that Western OEMs, where are we on the, maybe a bifurcation of pricing, in the separate markets? Because left to their own devices, Albemarle has to look after their shareholders. And yes, it's not their job to be, America for America's sake. They've got to go where the costs are lower. But like, how do you see that evolving? Do you see different pricing in different markets for the same materials?
It's a really hard question, that, because I think that the problem you've got is over the next 5 years, let's say, whilst a new supply chain gets built out regionally. And then you'll also have this global base of supply coming from China, coming from the existing mines, South America, around the world for lithium, for example. So I've always viewed it as you've got a base level of global supply, and the supply chains already exist. But then on top of that, you've got regional supply. So I can see a bifurcation of prices. I think it will just complicate what is an already complex story, and we need simplification in lithium. And so maybe what you have is, actually, there's this global price, which is maybe a lower price, and then you have regional premiums on that price, like a USA premium or an ESG premium or something like this. And that's actually something that Benchmark is working on in its pricing division at present. Is okay, what is the reflective true price of lithium? This is the one thing that we always try to put out in our data as independent price assessors. And then what's the true reflective price, which is why I really like our global weighted average. I've never liked the China price because it's so volatile. And then on top of that, what's the regional premiums that allow for a supply chain to build in the United States? And I think that's a much more sensible way of doing it. The problem is, as you say, all these lithium companies, lithium producers are public companies. So you are very restrictive on what pricing strategy, especially, you can deploy.
And right now, the biggest demand is in China. Okay, great. Congratulations once again to the $100 million man. I don't know, 500 million, whatever it was, but it's great to watch entrepreneurs. We've watched a lot of microcap companies, from like Lithium Americas to Piedmont to now Winsome Resources and others, grow from very small to unicorns. Yeah, the final question I was thinking about, Elon Musk has basically said, please, entrepreneurs, get into the refining, not the mining industry. Do you have a view on mining versus refining? And with this windfall now, might you, just where are their software margins in benchmark, publishing, right? Or in mining or refining? What would you choose?
Well, actually, I would choose to go and sit on a beach for about 6 months, I think. No, to answer your question, I'm focused on Benchmark.
I'm kidding.
But from an investment perspective, I don't disagree with Elon because I'm too scared to. But I think I think when he said the money's in the refining, I agree in the United States that refining capacity is the bottleneck, right, for sure. But if you're mining raw material, you're mining it at scale, so you're not a small fringe producer, but you can actually be a part of the the 70% of the pie, then you've got everything in your hands, right? If you own the refining in addition to the mining, you own the gateway to the entire supply chain. And so I've always loved the specialty chemicals nature of lithium and of graphite. It's not a chemical, but it's a specialty mineral in that sense, where it's the refining of it is quite technical. And therefore, for me, the mines and refineries or chemical plants or processing plants should go hand in hand. If you own both, you own the gateway to the supply chain. And for me, that's I think always the strongest strategy.
So it's still your view that the auto OEMs have to become miners?
Yeah, I don't mean them physically, the CEOs physically getting a shovel out and a pickaxe, but what I mean is I think, they should be like 30, 40% shareholders in mining companies.
Okay. GM's doing that with Lithium Americas,
Exactly.
and hopefully Tesla will start writing checks for equity. Ford wrote debt checks into Liontown, but they got paid back. But actually getting their hands dirty, follow, Arnold, lead by example. It's not a dirty industry. It's an essential industry, and hopefully they'll take that on board. Okay, great. Thank you very much again, Simon. Wonderful to have you here. Thanks for having me here at the Benchmark event. And to be continued.
Thank you, Howard. Thank you, Rodney. You guys do a great job. Love it.